Now, live from KUSI, this is Good Business San Diego. Sponsored by Wilsey Asset Management.
Hi, I'm Roy Robertson. Welcome to Good Business San Diego, where today we're talking about the topics that are important to you, your companies and your customers, your community, your family, and your money. And the following segment is brought to you by Wilsey Asset Management. Lots of us are making some important changes to start the year, so is it the right time for you to consider hiring a new investment advisor? Brent Wilsey is here today to review a few of the things that you need to take into consideration. And Brent, I guess it starts with, how'd you do last year?
You know, and that's a great point, because a lot of times people, they don't know how they do. And then, you know, it's a new year, 2026, and may have made a resolution for New Year's saying, I'm going to get my financial house in order.
Right.
Well, how do you do that? Well, if you're doing it yourself, be realistic. What was my return in 2025? And if you have an advisor, call that advisor up, say, what was our percentage return in 2025? And that's so important, because it's a gauge of how you've done. Now, 1 year doesn't make the whole scenario, but you still want to know percentage-wise how you do it. And a lot of advisors, brokers, either they don't know or they don't want to tell you because, well, to be frank, it's probably not that good.
So they're probably not picking up that phone at the end of the year and say, hey, you're down 20% and the market's up 17%. No problem.
Yeah, no, they won't do that yet. So, but you should know. And again, if you are down, why? I mean, we're a value investor, so there's times that growth is extremely well, and we kind of chug along. We could even be down a little bit. I'll tell the people, like, yeah, we're a value investor. Right now, our portfolio is down because of this. I mean, we're not going to be up every single month, every single year. I tell people over a 7-year period, you can be down a couple of years. That's going to happen. But understand what that advisor is doing and why they're doing it.
And it is a pet peeve for a lot of people and a rightful concern if they don't have that interaction with the advisor, right?
Yeah, because you don't have that interaction. And many times, if you're looking for a new advisor, maybe your advisor, you call them up, you don't get a return phone call for 2, 3, 4 days, sometimes not at all. You call them up, maybe you don't get the information you want, they kind of sell you, they dance around the topic, they just don't give you good information. They're managing your life savings many times. You need to get good information from that advisor.
Now, the thing that you want to know is your advisor's company a fiduciary. Explain what that is and the importance of it.
That is so important, because a fiduciary has, registered with the SEC, an obligation to do what's best for their client as opposed to themselves. Now, how does that compare to a broker? A broker has a lower standard called suitability. What that means, they can virtually sell you any mutual fund out there. Could be the worst performing mutual fund, but it's suitable, that's okay. So you want to be careful with that, and I want people to be very careful. There are what they call hybrid advisors that are both a fiduciary and a suitability or a broker, where they can still sell products. I think those are the worst ones, because you never know what direction it is. Work strictly with a fiduciary, because again, your best interest is for them.
Yeah. Maybe suitable for them, not necessarily suitable for you. And that's the point. They may be trying to sell products that don't necessarily align with yours.
Yeah. I mean, there's so many products out there that they can sell you, and the big one has been the alternative investments. Oh, stocks are so risky. Go to private equity, go to private loans, go to private real estate, because you can't see, it doesn't fluctuate. It's all behind the scenes. But they make many times a good commission, good fees off of those. Mutual funds, you still have mutual funds out there that can pay a back-end sales charge, front-end sales charge, and the one that gets me is annuities. Whenever the market drops, which could happen this year, 10, 15% drop is possible, these annuity salespeople come out like, oh, you're losing money, you need to go to annuity because your principal's guaranteed. Now, we've seen people invest in annuities. We had a client come in our office about a year or so ago. They were in an annuity for 20 years. And the money still did not double.
Really?
And it should double about
Something's wrong here. There's a warning
something's
flag,
wrong
right?
here. And they didn't even know it. They go, something didn't look right. So, I mean, you want to stay away from annuities. They're great, and the broker makes a 7% commission, sometimes more, off of those. So stay with a fee-based advisor, an asset advisor too. How are you getting paid?
And finally, a point that you've been very transparent about here on the show, and I know you are with your clients. Does the advisor manage? How does the advisor manage their own personal investments?
Yeah, very important, because I started doing this back in the 90s. I managed about $10 million, and I thought, gee, if I'm doing well with my portfolio, shouldn't I do that for all my clients? Well, we now manage nearly $800 million, and I've done well, and so are other clients done well. So it's not like something strange where, oh, this is better for you, for me. You want to make money that the advisor has to educate you on what they're doing. Important
things to review as we start the year, and hopefully a good year ahead.
Yes.
You'll find Brent online at smartinvesting2000.com, and we will be right back.